Welcome back to Market Day Report. Well, USDA out with the weekly export sales report earlier this morning. We'll have some numbers for you in a moment. First numbers we want to look at, the corn market. Trading Chicago September up 2 1/4, 367.5. And the December at 393 is 2 1/4 cents higher. What about soybeans? Well, the bean trade has been higher as well. Double-digit gains through March. Front month at 970. That's 11.5 higher. And the November at 987 3/4, up 10 3/4 cents. Now let's go wheat. Starting Chicago, 1/4 cent higher September, 514.5. 1/4 cent higher on July at 579 3/4. Hard red winter wheat, opposite direction. 4.5 lower on the September, 540 1/4. And new crop July at 577.5. Penny and a quarter lower. Spring wheat contracts in Minneapolis, penny and a half higher on the September at 556, with D's at 586.5, up 2 3/4. And the cotton market trying to turn things around, up 93 points in morning trade. December trade 69.48. Ted Seifried's with Zaner Ag Hedge. And Ted, we again got that export sales report, but what are you watching when it comes to the row crops?
Well, first of all, I'd like to note that it is end of quarter today and tomorrow. So you do have some of that happening, and that's not just a corn or soybean or wheat thing. That's really just happening commodity-wide. And when you have the funds really rather short, especially in the grain complex, grain and oilseed complex, it probably means a little profit taking and a little bit of strength. So we are seeing some of that today. But then, like you said, export sales, that was the big show here today. It was a marketing year high there for soybeans. We're finally getting some good numbers for these new crop soybeans, which we had been so far behind on. So yes, it is positive to see. In my opinion, it does not even come close to changing the USDA's balance sheet. If anything, it just says we might have a chance at getting to these numbers. Now, it's a very long marketing season. So, we've got a lot of time to determine that. But it's a good number to see. It's happening like right at the end of the month, end of the quarter. It's a good timing for that to maybe see some profit taking. And don't look now, Tony, but you've got soybeans testing their 20-day moving average, which also coincides with the downward trend line, the upper end of the downward trend channel that we've been in. So this is some very, very key resistance for soybeans here. And if we can close a little bit higher than where we're at right now, that's going to look really interesting on a chart. All that despite, and I love how we do weather right before we do this segment, all that despite the fact that there are some rains in for the driest areas, the areas that really need it in order to finish off soybeans. So if those rains happen, I don't know. I kind of want to throw the chart out at that point. I don't feel like the lows are in. Harvest lows, I don't feel like are in yet. But you have a constructive day here. It could be pretty interesting when we close here today. One last thing about export sales. We had a daily flash sale of sorghum to China day after it was reported by a certain news agency that China told everybody not to buy any sorghum. So it's funny how that works, isn't it?
Yeah, absolutely. And, if you think about it, we are coming up on the 8-year anniversary of that trade war that we had with China, and it started with sorghum. So that's how we'll tie all that together. No trade war really going on right now, just looking for buyers of our proteins. So let's come back and talk livestock in just a moment with Ted. Market Day Report continues in a moment. It's Market Day Report. Let's look at proteins. We did get the weekly export sales numbers and some good inspection numbers for both beef and for pork. So let's start with the beef side. Live cattle futures 30 higher, front month August 184.05. October down 27 at 178.35. For the feeders, we're watching lower prices across the board. September most active at 240.62, down 67, full buck lower on November at 235.37. And for the hog trade, We're seeing higher trends with October up 20 cents, 81.87. December 72.20, up 27. And some of this is we've seen cold storage reports for bellies down, I think I saw that 17%. So let's see if we can tie all this together with our previous conversation on sorghum. I think we traded pork belly contracts since we traded the Milo contracts in Chicago. Don't trade either one of those anymore. But with that said, what are you watching in livestock?
Yeah, I used to be in the pork belly pit for a brief period of time. And we all like our bacon. That's the takeaway from the cold storage report. Anyway, we've been all over the place. I think today is just a bit of a placeholder day for the livestock. I mean, it's early in the day. We'll see where we end up. But what we're not doing is really convincingly following through from yesterday's reversal lower in the cattle complex. Yes, we were down. We were heavy here to start off with, but we've really kind of clawed our way back. We're not back to unchanged yet, but we've really minimized the losses at this point. And I think a lot of that's tied into what's going on with the equities markets. We watch those pretty closely when we talk about the cattle complex, especially just trying to get a gauge on what domestic demand is going to be. That's our big driver for box beef prices. Exports are great to see, but it's just such a small portion of our overall balance sheet. Yesterday you had quite a bit of weakness across the board in the equities. S&P down 50 points or so, and we're taking really all of that back right now. I'm still going to say that you have an overall chart in the equities that looks suspect. That looks like we could be rolling over headed into the November election, which sounds weird to say because usually that's the opposite of what happens. But there's still a lot of concerns about the economy at the moment, Tony. And I think that's going to keep a bit of a wet blanket on the cattle complex. You have a cattle complex that's running into some very major resistance and pulled back from it yesterday. From a producer standpoint, you have to, I think, be a little bit worried about downside. I think it's a good time to be taking some protection at this point. Okay,
Ted, we've got so many mixed messages right now in the market. And you mentioned the equities moving higher. Good report really from NVIDIA, but the problem is stockholders want more, and maybe more isn't there. But GDP growing, annual rate 3.0 in Q2, but jobless claim, lots of mixed signals. That just means one thing. You have to come back and see us soon. Ted Seifried with Zaner Ag Hedge.